Hey folks, glad you could join us on another episode of Business Redefined. As always, this is your weekly, most comprehensive look at the world of business, finance, and economics. We want to talk about accelerating enterprise growth with a focus on the role that the European Investment Bank is playing in terms of supporting enterprise in this market. And we're pleased to have the man in charge of the regional hub for East Africa, that is Edward Clausen. Thank you so much for your time.
You're welcome.
Glad to have you on set. Tell us what the EIB does in this region, especially with a focus on private sector support.
Great. So the EIB has been active in the region since late 1970s, and we've supported more than 70 projects for a total of 1.8 billion euros. We are active in both the public and private sector, but I'll focus on the private sector here. We established our office here in 2005, so 20 years ago. And in the private sector, we provide both equity and debt. Debt we provide either directly to companies, generally larger companies, or we provide it through intermediated loans to banks or to microfinance institutions. The equity we also provide through intermediaries, and in that case we work through fund managers, private equity, venture capital, infrastructure fund managers. Finally, we also participate in public-private partnerships.
Wonderful. Quite a good intro there. Tell us about Boost Africa and what it is, the role it plays, and where do you see it taking the private sector in this side of the world?
So Boost Africa is an initiative from the European Investment Bank together with the African Development Bank and supported by the European Commission. It aims to support entrepreneurship and innovation in Africa, and we do this by providing equity finance to venture capital market and also grant financing for technical assistance. This is the aim of Boost Africa, and of course it has another aim of strengthening economic ties between Africa and Europe.
Okay. So you've spoken about the role you play by way of debt and equity financing. Then Boost Africa now comes in also with grant financing. It looks like for you the sweet spot is a bit of blended finance here.
Correct. Boost Africa very much is a blended finance. It provides equity as well as grants, but one of the interesting aspects of Boost Africa, and I think why it is also successful, is that not only do we provide normal equity, we actually also invest in what is called a junior tranche. And this way we de-risk a certain investment into a fund. And this is really an example of blended finance, as you mentioned. So by taking more risk and basically shielding other investors from any potential first losses, it makes it attractive for other investors to come into these funds.
Okay. On the equity side, I'm very curious as to what would be your typical horizon of investment in this market. And I'm asking that because many players you talk about in the VCPE space will tell you exit routes are a bit of a challenge. I wonder what your experience is.
No, that's true. It's not only a challenge in Africa, I can tell you, it's a challenge worldwide. I mean, generally these funds run for 10 years, but let's say from experience, you know that these funds generally need a few more years, maybe up to even another 5 years extra than before they are fully exited. So that's no different, but it's true that even in Africa, exiting is a challenge because the markets are not as deep as in some developing markets.
All right. And in terms of focus, would you say you are sector agnostic, or how do you play about it?
From our fund program, we've invested in 178 funds in Africa since we started invested. Yeah, more than $3.8 billion, and they have catalyzed $33 billion in all those years. So on a fund on that level, we're quite sector agnostic. If we look at Boost Africa, we like disruptive sectors that have the potential to really scale up. And this we see very much in the digital connectivity space, climate solutions, but also healthcare, education, and even manufacturing sectors. So it's still quite broad, but very much aiming at disruptive sectors that have the potential for large returns.
All right. Is there anything that you do around technical assistance? And I'm asking that because typically businesses would require not just the capital, would also require some hand-holding as far as the business management is concerned.
Indeed. So Boost Africa includes a grant component. The grants are aimed at the fund managers as well as entrepreneurs. So for them to scale up and to acquire new skills, but also to help entrepreneurs grow their business. So indeed, it is very important that there's more than just finance, and this is what we try to achieve with the grants. But let's not forget that venture capital also coaches and helps entrepreneurs to grow their business, right? As you know, venture capital funds typically take a board seat on a portfolio company and provide strategic advice, open their networks, and help businesses grow as they go along.
All right. In an environment where we are increasingly talking about integrated reporting, and by that I mean the triple bottom line of people, purpose, and profit, how are you embedding that into your considerations for the companies, your investees, if I could put it that way, in terms of the focus on sustainability?
Well, indeed, for us it's important. The revenues and the returns are important, but they're not our main driver. Our main driver is impact. And as I described the goals of the program, it is to create impact in Africa, focused on innovation, entrepreneurship, and job creation. But on sustainability, we also have a very strong focus. It's a priority of the bank, and the way we make sure it is implemented is by making agreements with our fund managers. So before investing, we look at what their focus is on sustainability, what their experience is, and by making an agreement with them, we ensure that they will implement it. And of course, the fund manager, by taking board seats and by being very actively involved with their portfolio companies, they can take those decisions in the right way.
Yeah. A number of funds I've spoken to in the recent past have told me that one of the challenges they're facing right now is what they would describe as almost a liquidity dry-up. That we're in a season where the deals that you would easily access are becoming increasingly fewer and fast-paced. Does EIB see this as an opportunity to cement its footprint further, especially looking at the global south markets like Africa and Kenya?
It's true that it's recently been even more difficult to raise funds. It's always difficult for a first-time team or an emerging manager to raise equity, and certainly in Africa. The way we try to help them is, first of all, by going in early. So we generally come into a first close of a new fund, and that gives confidence to other investors to follow us because of our long experience and the exposure we have to Africa. But also in this particular case of Boost Africa, we make it more attractive by investing in a higher risk tranche of the fund. So taking basically any potential first losses on our account makes it more attractive for the private sector to also come into these funds. So and in this case, in Boost Africa case, it has helped so far. We've already within the last few years raised 6 funds. We committed 78 million euros, but these funds have raised 382 million euros, so a substantial amount. They've already invested in 73 businesses, and this is expected to grow the next few years as these funds are being deployed before the end of their investment period.
All right. One common challenge that we have when it comes to private market capital raising is the question of the ticket size. And because deals here tend to be small and fragmented, it becomes a challenge. How can players like EIB then ensure we push this funding further downstream? Because let's be honest, the bulk of our businesses are small businesses. If you peg your ticket size at millions of euros, it becomes tricky for them to reach that segment. How do you support it?
So on Boost Africa, again, these 6 funds, some of them can go as low as a few $100,000 of euros. I mean, they can make a first investment at quite low amounts, certainly for, let's say, professional venture capital firms. And they go up to a few million euros. So this program is specifically aimed at the smaller tickets for startups and growing businesses.
Yeah, which is very, very important. Give us some color around your footprint across the continent. I know you've mentioned the figure that you've disbursed on a continental perspective, but in terms of a regional focus, how does the landscape look like?
So we probably have investments in, I think I've heard in 53 out of 54 African countries. So we are basically exposed to the whole continent. And as I mentioned earlier, we've invested 3.8 billion euros into 178 funds, and on an annual basis, we more or less invest more than $250 million each year into the market, into approximately 10 new African funds. So our program is ongoing, and we don't have targets for certain countries or certain regions. So we see where are the best opportunities. And they're basically in all the east, west, north, and south, to be honest. But Kenya and East Africa is a hotspot, especially here in Nairobi. Quite a number of fund managers are based, and so we invest actively here as well.
Okay. I was in a conversation yesterday at a conference around the conversation on, is there a trade-off between impact investing and return? Because increasingly then you have to focus on the impact side. What would be your perspective around that question?
For us, both are very important. I mean, we don't do this to make a lot of money, but the returns are important for two reasons. It is, of course, if the money comes back, it gives us an opportunity to keep investing into future funds. But also, we strongly believe that if the funds we invest in are not generating commercial returns, they will never be able to attract private sector capital. And that's the end goal, because the continent needs so much capital that it will have to come from private capital eventually. So the funds need to generate a commercial return to make sure that private sector is interested. So that's on the one hand side, financial returns are important, but for us, the main driver is impact. Impact into job creation, sustainability, and kind of supporting entrepreneurship and growing the private sector across Africa. We also have a strong focus on inclusive economy, so more participation of women-led businesses, women-owned businesses, or businesses aimed at making women more active into the workforce, as well as, and also for youth. Africa is a very young population, very well educated, tech-savvy in many occasions, and they need the capital to grow and start their businesses or find interesting jobs. So those two priority areas are also important to us. And we see that as part of impact of our interventions.
Does EIB have any prescription around equity investments by way of a floor on the stake? And I'm asking that because for the many of the family businesses in this region, at least in Kenya for that matter, ceding control tends to be a bit of a challenge. They need the capital, but ceding control is a challenge for them. Do you have a floor on beyond the stake? Doesn't make sense for us.
Not really is the real answer. We do both. We support both funds that take majority stakes as well as minority stakes. Clearly, minority stakes, as you say, are often easier for founders to consider, but it comes with risk, right? Because if you're a minority investor, you might not control your exit or take the decisions you want to take. But each fund manager has their own expertise and their own experience. There are plenty of examples also in the developed world where minority funds have been very, very successful. So it really depends on what the fund manager's investment strategy is, if we are comfortable with that, and if they can prove and show from maybe past experience that it works. So we don't know. So in short, we can do both.
All right. I know you've touched on this a little earlier, but we are having a national conversation around how we can deepen our local capital markets, both private and public. And that's because of what we are seeing within the global environment. Liquidity is tightening. What would be your advice in terms of how we can help deepen our private markets, our public markets?
I fully agree. I think both private and public markets have to grow and be deeper here. I think it's not actually just a question, I think, of the private equity market or the financial markets. In general, I think Africa, what would be very helpful, and it would actually stimulate private and public capital, is more predictability and more stability. And when I mention those terms, I mean this in predictability of regulations, of government policy, taxation, but also Africa is still very, very fragmented. I sometimes hear it's easier to sell from here to Europe than it is to sell to a neighboring country. And we know the travel and infrastructure challenges as well. So if Africa could become either one market or at least take steps towards facilitating business across the continent, this would be very beneficial for the economy, but also very beneficial to attract more private capital locally and from abroad.
Given what you've just said, what do you see as the opportunity of the Africa Continental Free Trade Area, which we've been talking about? We are making steps, maybe not as fast as we wanted, but that's the end game.
I think it would be fantastic. I think you should really, the more Africa can become one continent and speak with one voice and have one market, it would be very beneficial for Africa. I think it's not up to me or for DFIs to let's say DFIs from outside of Africa to to tell you what to do or how to do it, but of course we're very happy to support that, and that would be, I think, very beneficial for Africa, for the economies, for its population, and therefore for job creation and making sure the youth has opportunities to grow.
All right. As we dial down our conversation, the question is, speak to us broadly speaking about the overarching motivation, the inspiration behind Boost Africa and how you see it impacting the market 5-10 years from now.
Sure. So the European Investment Bank, as part of the EU, we are very interested in supporting Africa's private sector development, and the EU's flagship program called the Global Gateway, it has a strong focus on developing the private sector in Africa. Boost Africa is one of the components of this Global Gateway program, specifically targeting the creation and the stimulation of the private sector here in Africa. So the overarching motivation is to stimulate entrepreneurship and innovation. We believe the private sector in Africa is the future. Private sector is the key to growing the economies. Public sector has their challenges, and it's difficult anywhere in the world with limited budgets to focus very much on creating jobs. We believe that the private sector has to provide probably the bulk of the future jobs in Africa. So Boost Africa aims to play a part in that by, as I said, providing venture capital, financing, as well as grant and technical assistance and money to support really both on the financing side, but also on developing the skills needed to be successful. I hope that in 5 or 10 years' time, some of the businesses we've supported are real success stories, have grown a lot. We already see some promising signs that we can talk about, and that these companies will show that it's possible to be successful in Africa, to make good returns, and on the other hand have impact as well. New jobs, sustainable companies focused on sectors of the future.
Okay. One of the headaches that companies which raise capital have faced in the recent past are the question of wrong-way risk, and wrong-way risk in the sense that you raise foreign currency denominated capital, your sales are in local currency, and depending on how the global macros are, your currency can take a hit and then it begins piling pressure on you. I wonder whether, in your perspective, DFIs such as yourselves have any role to play in terms of catalyzing the capacity to mobilize domestic currency, whether it's equity or debt. Yeah.
This is a difficult question. We have had in the past mandates which were local currency driven. So indeed, it's a big issue that there's no easy solution to it, to be honest. Funds that are being raised in Africa are generally dollar denominated. It's not something we control, it's not something we ask for, but it's the nature, it's the reality. So I think this should probably be part of a larger conversation to see how we can solve that.
All right. Unemployment creation, a very emotive issue in Kenya, in Africa, because of the pressure that we have demographically and also the scarcity of jobs. As you extend financing, to what extent does this feature as one of the items you're very keen on to shape the targeted entities for investment?
Oh, it's key to us. As I said, job creation is one of the key drivers behind it. Maybe let me give you an example. One of the beneficiaries of the Boost Africa program is a company called Shamba Pride. They are connecting now in Kenya 80,000 smallholder farmers, enabling them to trade their produce at better rates and also get inputs like fertilizers and seeds at better rates. And there are 4,000 agro dealers that are taking care of all of this. And these are new jobs, or at least these people have now a lot of income coming through what this company has done for them by providing one platform in the agricultural space. So many of the companies we invest in have similar impacts on the local economy, so creating jobs or allowing people to grow their income. And this is a key driver for us, and we also monitor how many jobs are created or sustained as the program goes along.
Oh, wonderful. I was actually going to ask you, in terms of the investments you deploy, how is your monitoring evaluation structure? How do you ensure that the investee entities are actually meeting the targets which you had agreed upon?
So first of all, before we invest and before we commit our investment, we agree a contract, let's call it an agreement with the fund manager. And it will stipulate which sectors they can go into, what type of companies, and kind of the parameters around it. It also prescribes how to report to us. Globally, I think it's pretty similar. Funds report on a quarterly basis, and we will specifically ask them to report on the areas of our concern, including job creation. So they generally report quarterly and then a real full report every year. The quarterly reports are a bit more concise.
Okay, so there's a structure around
There's a structure around it, and yes, we will measure the impact very clearly.
All right. Maybe just to close this, to ask you about if you had a parting shot, and this parting shot could be either on what your proposals would be from a policy environment to the businesses as well. If a business is watching this and keen on how do I become an investee entity, of course you said you go through the funds, but what would be your parting shot there?
I think the entrepreneurs are there, and the desire to raise capital is there. I'm not sure I have to recommend many people what to do there. I think the main recommendation would be more at a government and maybe local private sector level, as I said, making steps towards being one market, having stable, predictable regulations, government policies, taxation. I think these are steps that would really boost the economy and would really therefore also attract more capital into the market, which would allow the entrepreneurs to start their businesses.
All right. Thank you very much.
Thank you very much.
We have been having a conversation with Edward Claassen from European Investment Bank. He heads up the division focusing on this side of the world, which is East Africa. We've been covering a raft of issues, including the structure of financing you can get from that. That is either equity, debt. There's also grant financing, but remember it goes through a number of funds and therefore it is not direct. And also the issues which he believes will help catalyze activity in this market, including predictable and stable policy environment, taxation, etc. And we shall continue highlighting these issues for the interest of accelerating our private sector and the impact it has on the broader economy. So stay tuned to Business Redefined for the latest as and when it happens.
We founded Power Internet in 2015 and launched our service in Kibera in Nairobi in 2016. Power's focused on solving the problem of why large numbers of Africans aren't engaging with the internet. If you look across sub-Saharan Africa, less than 20% of people use the internet. Kenya's a little better than that, but it's still only 40% of the population are online regularly. But when you look at that problem and go a little deeper, what you find is that for most people, their only form of internet is mobile internet, 3G, 4G type internet. And the problem with that type of internet is it's very expensive and most people can't afford to use a meaningful amount of internet. So our mission is how do we get people online and able to use the internet in an abundant way, able to use a large amount of data, able to fully engage with the richness of the internet. So the innovation we've created inside of Power is working out how to deliver the internet in a very affordable manner by being very efficient in the infrastructure that we build. But we do still need to build radio masts, towers, fiber infrastructure. And to do that, we needed to raise additional capital into the business. And so over the life of the company, we've raised money from various kind of venture capital firms, private equity firms, and we've also taken grant funding from various parties. We've been working with Boost through a fund called Seed Stars Africa, and that capital has been used to finance additional infrastructure, to finance additional equipment that we provide to our customers, to hire additional people into the business and to train those people in all the skills necessary to either sell and deliver the service to our customers, to build that infrastructure, to operate all the technology that we deliver.
The Boost Africa initiative is part of the Global Gateway initiative, and Within Boost Africa, we are supporting sectors ranging from logistics to education, but also the creative industries like music. We have a strong focus on youth and women-led businesses. And just to name a few companies, we've supported POA Internet, Shamba Pride, Turaco Digital Insurance, and many others. And I think this also creates interesting opportunities for the youth of Africa.
Natumia internet poa kwa miaka kama 2 hivyo. Imenisaidia sana kwa kupost vitu zangu online, kila kitu, Instagram, Telegram, WhatsApp, TikTok, na ni affordable, and for internet is very good. In terms of speed, it is good. In terms of payment, it is good. In everything, it is poor.
POA today employs about 400 people across the business directly on the payroll. Those are people in selling, installing, supporting customers, building the infrastructure. And many of those people have been hired in the last 12 to 18 months since we got involved in the Boost Africa initiative. So since we started talking to Boost Africa, we've expanded our service from several areas of Nairobi, across much of Nairobi. We've expanded into Mombasa, we expanded into other cities like Nakuru and Eldoret. We have some other cities inside of Kenya we want to expand into over the next 12 months. And beyond that, we're looking at how do we take the service we're offering here in Kenya and take it into other African countries.
We are here to support private sector development. We're here to support startups and SMEs. But also to help young entrepreneurs launch their business. So it really fits very well, and it's not only that we bring money, we also bring technical assistance, technical support. So in a way, Boost Africa is a unique proposition for young entrepreneurs in Africa.